Good morning. Welcome to the BF Anderson Technical Report for August the 15th. It's been a difficult stock market. Let's get right into the graphs. As you can see here with the NASDAQ, we have pulled back. We are in correction here. This is not a bear market at this time, but we have had a pretty substantial pullback. And you can see that the NASDAQ made a low on August the 5th and rallied back above the moving average, but then has failed to break above it and hold above it. So this is a time to be cautious. However, on the weekly graph, we're still in pretty good shape here. We've been seeing a couple of weeks of pretty high volume to the downside. The 35-week moving average continues to stay in an uptrend, and the index is above the moving average, so that is a positive. Now, this is a negative. Here we have the advanced decline line. We got substantial decliners yesterday. As we know, the Dow was down about 800 points. The advanced decline line has somewhat rolled over. It's not in a long-term downtrend, but it has definitely gone into a downtrend. Same is true for the high-low index. We're not seeing a lot of highs. We're seeing a lot of new lows, and as a result, this indicator is looking troubling. The number of new lows, yesterday we had 286. You can see that the number of new lows have been elevated now really since the beginning of the month. We call this indicator the leaking boat indicator, meaning that when we get over 40 a day, which we started to get back in July, it's telling you that the boat is leaking and that a correction may be looming. However, the long-term indicators look perfectly fine. We're still in an uptrend with the moving averages. Remember, this is the 10-month moving average versus the 20-month moving average. The index continues to stay above the upper moving average, and both of these moving averages are in uptrends. So the long-term indicator is fine. Now, here's the most positive development that I can think of. This is the fear-greed index. In other words, like Buffett said, you should be greedy when others are fearful, and you should be fearful when others are greedy. Well, back here, when we got down here into greed, not extreme greed, I basically was saying it just seems like when we get down to these levels, we go into a correction. Well, sure enough, we've gone into a correction, and as a result, we're starting to see extreme fear. So, if you really think about it, when do you want to put money in your portfolio? When everybody and their brother is optimistic and everything's going through the roof? Or do you want to put money in your portfolio when things are down and everyone's feeling out of favor? Now, here is another long-term indicator that continues to look very constructive. This is the S&P 500. This is the 200-day moving average. As you can see, it's in a fairly strong uptrend. The value line geometric index continues to act poorly. It's broken back down into the box that we broke out of back in 2015, 2016. So the average stock is just not doing as well as the market cap weighted indexes. This is the global market. This is the global Dow. Again, stuck. It's stuck in a trading range. It's been stuck in this trading range now going back to 2017. The international stocks just are not acting all that well. That's pretty much the part of the problem. Now, in the media, we're hearing a lot about the yield curve. So let's talk about the yield curve. One thing I do want to say about these types of indicators, anytime the media really focuses on something, it tends to not work. I can't explain why that is, but when everybody and their brother is looking at something, it just generally speaking doesn't work. So if we take a look at the yield curve, now remember what the yield curve is. It's where you're taking in this case, we're taking the 10-year government note, the yield, and we're comparing it to the yield of the 2-year government note. Now, think about what happens to the banks. The banks lend money, or they buy money at low rates. In other words, they don't pay you anything. And then they lend money at long rates. So they make a spread. That's how they make their money. So when the yield curve inverts, it means that long-term rates are higher than short-term rates. Therefore, the bank's profit margins get really affected. So let's go back in history real quick here. We had an inversion. You see here, what I've got here is the graph of the yield curve. And the blue line here is the where it would invert at zero. So we inverted back in 1990. We inverted back in 1998. We inverted again in 2000. We inverted in 2005, and then we came out of it, inverted again back in 2007. And then this is where we are today. So let's just go look at this and see if this is worth anything. So I took an example. This is the 1998 inversion. You can see here that it inverted in the month of June, right towards the end of June in 1998. So what happened next? Well, here is the S&P 500. The circle here is when we got the inversion, and you can see that the market didn't peak, and we go into recession until around, it looks like to me right, September of 2000. So you basically went about 2 years after the inversion before the market peaked. Okay, let's take another example. Here is the yield curve back in 2005. It inverted, stayed inverted, and came out of it, then inverted again in June. Pretty much stayed inverted, didn't come out of inversion in any way until 2007. So we do know that we had a major recession in 2008. So it did call the recession. However, here's the problem. The inversion took place in December of 2005, but the market didn't peak until January of 2008. So we're talking roughly 2 to 3 years. So it's like, is this indicator worth anything? Well, the question is okay, and this is just the way to look at it. Here's a graph of the S&P 500 going back to 1990. You can see every time we had an inversion. So we've had 6 inversions and 2 recessions. Now, these inversions did call recessions. There's no doubt about it. The way the media plays it is that this is just an absolute certainty. The problem is that you get the inversion, but then the market doesn't. We don't go into recession until about 3 years later, 2 to 3 years later. So it seems to be an indicator that can be very premature, or it could mean nothing. One of the things to think about on this current inversion is that interest rates have never been this low before. So why is that? Well, first of all, I did want to mention that China, this is the Shanghai Stock Exchange. You can see that the Chinese market is in a really serious downtrend. The Chinese market is not looking good at all. So if you really then jump to Europe and you look at the 10-year government bond, which is called a Bund in Germany, it is currently at a negative 0.65 yield. So internationally, things are going not well, and so money is flooding into the United States, and they're buying our bonds, and that's what's driving the yield down, because it's all about supply and demand. So when the demand for bonds goes up, interest rates go down. So Ed Yardeni, who's an economist, says the reason for this inversion and the reason for the low interest rates is the fact that the European markets and the Asian markets are doing so poorly. So look, let's take a quick look at the top 5. Again, this is just a watch list, just a way to see where the money is flowing. Here's Carvana, which is vending machines for used cars. You can see the gap up, had a gap up buy signal on the earnings announcement. Actually, it looks very good. See, this is what you call, you had really a double gap up. You had a gap up here, then another gap up. Now you've got what you call an ascending flag formation. That's kind of a very positive pattern. This is Enphase Energy. Again, this is a company that makes micro inverters for the solar industry. They announced earnings, major gap up. You got a nice gap up. Now you've got that ascending flag. This is positive. Then we have Guardant Health. Now this is a different situation. We had this stock. I decided to let it go. Kind of a break-even situation for us. We got the gap up, but then we got the descending flag, which I tend to avoid. Roku, which has been a real good winner for us. We got the gap up, another gap up, another gap up, all-time new high. Let's just see if this thing doesn't consolidate a little bit. But Roku, again, is into video streaming. A recent report came out from Needham & Company that said that Roku was better than Netflix. I have to agree. I canceled my Netflix subscription. Shopify. Again, you've got a real good solid pattern here. Trying to break down, but then rallies back. Trying to break down, but then it rallies back. So Shopify again is a e-commerce play that is very interesting and looks good. So if you have any questions, give me a call. But I wouldn't pay too much attention to the inversion of the yield curve. I think it's somewhat of a worthless indicator. One of the things we have to do is determine which ones we should be looking at and which ones we should ignore. I kind of think we should ignore it. Thank you very much.